Hey, hi there. Welcome, 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 welcome. We're going to talk about some business taxes today, or taxes 2021 for that minority business, that individual that doesn't mind having a little ebonics thrown in a couple of sentences there. I'm your girl. Hi, my name is Chiquila Richardson. I'm the CEO of Black Girl Magic Masters, and what I do is I help people write the vision for their business plan and make it plain. And I also help others with project management and mostly economic development issues in the minority community. But one thing about me is that I also include astrology and numerology. So, one of the things about me is that I am pursuing my master's degree in business administration. It'll be just a few months here. I am currently taking a course in economics and a course in accounting. And I thought, hey, wouldn't it be nice if I taught small minority business owners some of the things to look forward as far as taxes is concerned for 2021? You agree with me? All right, let's do this. All right, let's get into it. Let's get into the brass tacks of what's going on. So, tax obligations, they are very confusing and they change all the time. But here's what you can expect in 2021. And I'm getting all this great information from one of my trusted business authorities. That's the Business News Daily. And they provide business newsletters that I feel are very informative. And just in case you didn't have a time to read or peruse through your emails lately, let's go ahead and find out what they're talking about. So, and the music that you're hearing in the background, it's just because I'm one of those people that need to have something playing in the background all the time so that I just, can focus better. So I apologize if you're having any kind of difficulty listening to me. But I am here to teach and share information. Black Girl Magic style. Basically we are the redefinition of excellence. We just put the hustle in business, and we're often the marginalized, often the ones that are closest to the pain of America, and oftentimes are the ones that are most resilient when it comes to getting this money. So when you are watching me, you are watching the embodiment of a lot of Black women in business. Let's dive in, shall we? So the COVID-19 pandemic led to new tax incentives and programs designed to aid small businesses. So in 2018, major tax legislation resulted in many changes for small businesses, including new rules for the pass-through entities and bonus depreciation. You should work with a certified public accountant to ensure you're complying with current regulations and paying the right amount. Okay? Again, I'm going to repeat that. You should work with a certified public accountant, a CPA, to ensure that you are complying with the current regulations and paying the right amount. Because again, like I said, tax obligations can be confusing and they can change, and they change all the time, and nobody's expected to know all of it all the time. All right? So anyway, you should this article that I'm reading is for small business owners who want to know what to expect for their tax obligations in 2021. Now, they say although there weren't many major changes to the small business tax code this year, several tax credits, loan programs, and acts are created to help businesses weather the effects of the COVID-19 pandemic. So the last major changes to the tax code came in 2018 with the Tax Cuts and Jobs Act, which included a lower corporate tax rate and new rules for pass-through businesses and a tax break for some industries, mainly the rich one percenters that Trump so happily gave all that money to. Anyway, the tax changes were so significant, I would imagine that there's still a lot of issues in terms of digesting what has actually occurred, says a guy named Wayne Weingarten. And he's a senior fellow in business and economics at the Pacific Research Institute. And he's like the managing editor of the Econostats. But anyway, he goes on to say that basically uh, he thinks that we're probably still trying to learn all of the little intricacies of the tax code from 2018. That I'm pretty sure that's one of the reasons and contributed to Trump's wonderful $750 tax bill, but I digress. So for us regular people, as a small business owner, it's basically important to stay up to date on current tax laws so you pay the right amount each year. And if you're going to be doing taxes on your own, come on, find some of the best tax software, okay? And then reviews. And if you want links to some good tax software for businesses, comment in the comments and your girl will get to you. So now let me just talk about it. These are various types of small business taxes. Small business taxes vary based on the structure of the business, but here are the 5 primary small business taxes. You got income tax, except for partnerships. All businesses file annual income tax returns. Partnerships, however, file information returns, right? Then you got the self-employment tax. This tax is on your net earnings from your self-employment. And it goes towards your Social Security and Medicare obligations. Then you have the employment taxes. If you have employees, you have taxes and forms related to their Social Security and Medicare taxes, federal income tax withholdings, and federal unemployment tax. Payroll taxes fall into this category. Now, you also have an excise tax. There are several types of taxes that fall into the excise tax category, okay? This affects you if you make if you sell certain types of products, if you operate a certain business type, if you're using specific equipment, facilities or products, or are paid for qualifying types of services. If that sounds vague, it's because it cuts across many categories, and the classic examples of products that carry an excise tax are like fuel, tobacco, and alcohol. And basically, you can learn more about excise taxes from the IRS. All right. And then you have the 5th tax is estimated taxes. And many businesses, especially sole proprietorships, partnerships, and S corporation shareholders, they must pay quarterly estimated tax payments. And this requirement applies if you do not have taxes withheld from each paycheck, or you do not have a sufficient amount withheld from each paycheck. And that's the estimated taxes. A key takeaway here is there are several types of taxes that small businesses may need to account for, including income tax, self-employment tax, employment taxes, and excise tax. And don't forget the estimated tax. Anyway, things to remember for 2021 is that the coronavirus pandemic resulted in changes to business taxes in 2021, and businesses saw many new tax incentives, many new tax breaks and rules as the U.S. government, they tried to combat the COVID-19's toll on the economy. And here's some of the new programs and some of the changes. So they had the Coronavirus Aid, Relief, and Economic Securities Act, the CARES Act. And the CARES Act introduced the Paycheck Protection Program, the PPP, as an emergency loan that allocated billions of dollars to small businesses. And the PPP is a forgivable loan so long as the funds are utilized to fund the payroll, rent, mortgage, and utility payments. And any money a business received and was forgiven through PPP is not considered taxable income for 2020. And though any amount that is not forgiven is taxable business income. All right. So, however, some uncertainty does remain about whether business expenses paid for with the loan will be deductible. So just kind of keep that in mind. But then there also was the economic injury disaster loan, the EIDL loan. And now, again, that was another SBA loan, and it was designed to help businesses affected by mandatory shutdowns or economic shutdowns caused by the coronavirus pandemic. And so the U.S. Small Business Association, the SBA, expanded the EIDL loan, or the EIDL program, the Economic Injury Disaster Loan. A business that receives funding from the EIDL is still required to pay income taxes on this loan. All right, so then you have the Employee Retention Tax Credit, the ERTC. So businesses that were affected by COVID-19, they can use the ETRC to retain staff members. To qualify, a business has to have been fully or partially closed to a government-mandated shutdown or experience a decline in the gross receipts of more than 50% for any given quarter when compared with the same quarter in 2019. Employers that qualify for the ERTC are eligible for a tax credit that's equal to 50% of qualifying wages, which is up to $10,000 per employee between March 13th, 2020 and January 1st, 2021. Right? So, again, that's the Employee Retention Tax Credit, the ERTC. And again, I said employers that qualify for the ERTC are eligible for a tax credit that equals to 50% of the qualifying wages, up to $10,000 per employee between March 13th, 2020 and January 1st, 2021. Then you have the Families First Coronavirus Response Act, the FFCRA. And the FFCRA required that certain businesses, it requires certain businesses to provide sick and family leave to employees who were affected by COVID-19. And businesses that made these payments are eligible for tax credits, just period, point blank, for 100% of the cost of sick leave pay, family leave pay, qualified healthcare plan expenses, and the employer's share of the FICA taxes for sick leave expenses they incurred under the FFCRA. Then you have the business interest expense deduction increases. Finally, under the CARES Act, the allowable business interest expense deduction was increased for some business entities from 30% to 50% of adjusted taxable income. Key takeaway, the CARES Act, the EIDL Act, the ERTC, and the FFCRA played key roles in helping businesses weather the coronavirus and storm, basically in 2020. And it's important to know that these changes may affect your taxes in 2021, okay? In 2021. Anyway, previous tax changes. Now, there were some other minor changes that stem from the 2018 tax reform law. So as you work with your CPA, your accountant, or tax professional, it's important to understand all the regulations that were implemented. So the noteworthy changes include that there was deductions for pass-throughs and deductions for first-year bonus depreciation and deductions for net operating loss changes. Okay, so international business-wide, internationally, it's this guy named Anthony Parent. He's like the founding partner of Parent and Parent LLP. He said that many small businesses may have a rude awakening if they have significant operations abroad. There are a lot of small and medium businesses that have some sort of international components, and they're trying to get ahead of it and warn people that the international taxation and regulations are going to be very complicated. So it's important to work directly with a professional, okay? Just to ensure that you're being taxed at the correct rate. I'm just saying, it just matters. It just matters. Just make sure that you get with the people that, that might know what they're doing. Now, your girl's doing taxes this year and from here on out. It doesn't hurt that I'm getting my master's degree shortly here, and then I'm currently taking an economics and accounting course right now. But anyway, also there's a SALT cap. So as of 2020, filers can deduct up to $10,000 in state and local property and income taxes. Many business owners who operate a pass-through entity in a high tax state can take advantage of SALT deductions, SALT. So Weingartner said that all business owners should be aware of this cap. And I really think in the high tax states, the SALT cap is going to be meaningful, more for small businesses, just because they're going to be filing through their personal taxes. So in previous years, deduction for pass-throughs and corporations. In previous years, there was a significant deduction for both pass-through and corporate entities So pass-through businesses are small businesses that are structured as S corporations or a LLC, a limited liability company, or a sole proprietorship or a partnership, right? And pass-throughs make up approximately 95% of the U.S. businesses, just so you know. But the law now provides a 20% deduction for those businesses. The only limitation is for owners of some service-based businesses, like law and accounting firm owners who make more than $315,000 if the owner is married and filing jointly, or 157,000 and a half plus if they are unmarried per year. So that's the limitation for owners for some service-based business. Because like I said, like the law, the accounting owners who make more than $315,000 or married, filing jointly, or have 157 plus, no. All right. So C corporations are also getting a big deduction. The law lowered the tax rate from 35% to 21. Hey, thanks, Trump. To 21%. This slashed the rates aimed to bring major corporations back to the U.S. because they were over there in the international companies where it was cheap, getting cheap labor. And so this is what he used in order to bring all his friends back, the rich 1%, and employ workers and create more wealth here in this country. But anyway, we're so money hungry that, that's free enterprise for you. Anyway, there's also a first year bonus depreciation. So the first year bonus depreciation deduction was changed to 100%. In other words, businesses that made eligible equipment and property purchases could deduct the full amount of the purchase price instead of writing off a portion of the expense each year. This provided businesses with more money up front, which lawmakers hope will be invested back into the business or used to hire workers. All right. And matter of fact, Josh Zimmelman, founder of the Westwood Tax and Consulting firm, said that this would enable businesses to write off the cost of assets in one shot. And a company can invest in vehicles, computers, and equipment and claim the entire expense on their tax return, Zimmelman said. Weingarten said the break is an incentive for businesses to spend more. Anything that gets you closer to complete expensing is going to increase the value of the depreciation, lower the tax burden, and reward those capital intensive firms. So there's also net operating loss changes. So net operating losses, NOLs, can no longer be carried back for 2 years. Instead, they can be applied for an indefinite amount of time going forward. So NOLs occur when a business's tax deductions exceed its taxable income. So it functions as a form of a tax relief for businesses where business owners can apply a net operating loss to future tax payments, So the change eliminates businesses' ability to restructure taxes completed in the years past, but it extends the lifespan of the NOLs indefinitely. However, this can be applied only to 80% of the taxable income. So Weingarten said that the thinking behind this change of the net operating loss changes is to incentivize businesses to take risks and spend more money. And knowing you can carry the net operating loss forward and indefinitely, it lowers the cost of failure, he said. So the key takeaway is following the 2018 tax reform, there was some minor changes business owners should be aware of. Specifically, they are now deductions for pass-through entities and corporations, first year bonus depreciations, and that net operating loss changes, But there's some important 2020 deadlines. So due to the COVID-19 pandemic, some tax deadlines were extended in 2020, and it's unclear if similar extensions will be provided in 2021. So those extensions included S-Corps were expected to file business taxes by March 15th. The original deadline for 2020 tax returns was pushed from April 15th, 2020 to July 15th, 2020. Quarterly estimated tax deadlines were pushed from April 15th to July 15th, June 15th to July 15th, while quarter three and quarter four deadlines remained in September 15th and January 15th, 2021, respectively, right? But the key takeaway for this is that many of the tax payment deadlines are extended in 2020 because of the COVID-19 pandemic. And so here's some small business tax tips. If you purchase a business this year or are new to small business tax structures, hold on, you already know I ain't got no music in the background. Well, holla. Well, how y'all feeling out there? I hope everybody hanging in there. Just keep the faith, keep praying. God is still in control. Just know that. So anyway, but my small businesses, here's some small business tax tips. If you purchase a business this year, you know what? Let's bring our friends into this conversation. You know what I'm saying? Because I'll be leaving them out. And I just want to make sure that my people, but that they don't feel like I'm just completely leaving them out, which I am. But, So one of the things that I like to do is I like to make sure that all of the people that are with me are with me. And I'm not going to leave nobody behind. That's one of the main missions I have. My people, the minority community, will not get left in the dust with all of this fancy new stuff going on. And that's why I wanted to have this video to make sure that the people that are willing to listen to me, they get something out of it. You know what I'm saying? And that's all to that. So I love y'all. And like I said, we're gonna bring in our other friends. So, and when I say our other friends, that could either be Instagram or Facebook. And this time it's just going to be Facebook. Just so that people know that it's not that bad out here. You know what I'm saying? That it can be worse. Okay? That's what I want to make sure we are on the same page. Hey family, happy New Year's. Did y'all get them vision boards up? I'm keeping that same energy. I was just discussing some tax tips on my YouTube page. Hey y'all. I was just discussing some tax tips on my YouTube page, and I thought before I end the video, I could bring in my family members and just share some small business tax tips for 2021 because I love y'all too and I miss y'all too. And I just thought that, hey, why not? So real quick, if you purchase a business this year or are new to small business tax structures, there are a few things to keep in mind. While it is possible to do your own taxes on your own, considering working with a CPA or a tax professional, you might want to consider that. A tax professional can ensure that your business is taking advantage of all the deductions available. And more importantly, they are paying everything you owe, So here are 5 other little tips. So from now on, I want you small business owners that just purchased you're in your first couple of years of business. From now on, you're going to think about taxes all year long. Small business owners should not have to, we shouldn't treat our income taxes as some kind of annual event. Just like we treat our business plan like it's some kind of something you do once in a lifetime. No, rather, tax planning should be a year-round activity. Waiting until the last minute makes tax preparation more complicated. and it limits your money saving options. Tax tip number 2, be aware of the law changes. Even with the help of a skilled professional, a small business owner must keep up with new changes. I mean, this will ensure that your tax professional is doing the best possible job and keeps you informed as a business owner. This is why, okay? Number 3 tax tip, don't make assumptions, my new small business owner that's only been in business for a year or so. Never make business decisions assuming that particular tax breaks will pass or that certain policies will be enacted. Don't do it. Don't do it. Tax tip number 4, choose the right state to incorporate in. People, you don't need to incorporate your business in the same state in which you run your business. If you are just starting out, here are some of the best states to consider incorporating your business in. Well, you're going to have to email me for that information. Like I said, hit me up in the comments or hit me up on my website and ask me further questions on how to choose which state to incorporate in and which state is best to consider. And also, my final tax tip is you don't actually want a tax refund, small business owners. It is possible to get a tax refund as a small business, but in most cases, it isn't to your benefit. Typically, a refund means you overestimated the amount of taxes you paid, which could have been reinvested back into your business. Key takeaway, tax considerations for small business owners include planning for taxes year-round and keeping abreast of any changes and choosing the right state to incorporate in. Now, for those on my Facebook that's going to see this video, I recorded all the different type of taxes that are going on for business on my YouTube page. So it's Black Girl Magic Masters LLC, my YouTube channel, and you'll see this video. But like I said at the beginning of the video, I actually put all the tax tips on there, all the stuff for businesses. Man, I went in. But anyway, let's talk about some small business tax deductions. Y'all want to do that? Okay. Well, this isn't going to be like a comprehensive list of tax deductions available to small businesses, and you need to ensure your business is eligible for these deductions that I'm about to talk about. Because, I mean, while this list does provide like some potential deductions, it's going to be best that you get with a professional, a tax professional, a CPA, someone who can ensure you get all of the relevant deductions, right? So, real quick, hold on. Let's get our business popping in. How's everybody doing? I miss y'all. I hope y'all staying emotionally and mentally healthy. All right. So, like I said, let me finish this video out. Like some top small business tax deductions. Rent. If you rent your office space or a retail location, the cost of your rent is fully deductible. Home office. If you have a dedicated workspace in your home, it must be regularly and solely used for business. Then you'll be eligible for the deduction expense related to that portion of your home. The simple option is to take $5 per square foot up to 300 feet. But you can break it down as a percentage of the total square footage of your home and itemize your costs related to the goddamn space. Also, advertising. Hey family, I can't see you if you are in my comments. I miss y'all, but I wanted to make sure that my small business owners, get some of these small business tax deductions that a lot of small businesses use. They use, like I said, we just talked about rent, we just talked about home office, but then there's the advertising. So promoting your business not only helps you grow your business, but it also may shrink your taxes. Because as these expenses are fully deductible as well. This includes such things as business cards, flyers, and digital marketing. Also, I'm sorry, Facebook. I just wanted to check on y'all and let y'all know and let y'all see what I was doing. If you want to hear more, I'm going to finish this whole little list on my YouTube channel. But I miss y'all. Love, peace, and hair grease. It's about one, two. I got some. I'm just going all in because I care about my people. And if my people care about me, they're going to support me and go to my YouTube page. I mean, for goodness sakes, subscribe. But I love y'all. Love, peace, and hair grease. Facebook, you already know. Forever, forever, that love we got. But anyway, hey, Uncle Roy. Hey, Uncle Roy, I'm about to get my master's degree. Why did my economics teacher just give me the highest praise? But anyway, I did not want to talk to, hey, overseer, hey, fam. I am, like I said, oh, I got 6 people on here. Okay, I'm going to finish out my little list on here. I'm not going to cut y'all off. Let's finish talking about some business tax deductions, okay, that most people usually claim, right? Because I see y'all over here. And I got 6 people, and I miss y'all. But anyway, so let's finish talking about this small business tax stuff, y'all, because it's real. And I know y'all not all going to come to me, which I've been telling y'all to come to me, Raining Cash Taxes. Listen, I've been giving out opportunities to get a $500 to a $9,000 cash advance, opportunity to hit me up 24 hours a day, opportunity to do this whole tax thing virtually. Not to mention, I'm taking an economics and an accounting course for my master's degree. Why wouldn't you want to? I'm gonna put my link. I'm gonna put my link in the comment. I'm gonna put my link on this video. But let's finish up some of these tax deductions that may help my people get. Because when you got a vehicle, as long as you can document and verify that that vehicle is used for business purposes, you can deduct operation costs. As with home office deduction, you can choose to use the simple deduction, which is 57.5 cents per mile as a 2020. Or you can itemize specific costs. That's what you can do. Also, listen, utilities. The basics of keeping your business running are fully deductible as well. You can deduct the cost of utilities such as electricity, water, heat, internet, and the landline. Y'all don't want to come and get your taxes done by me yet? I'm just saying. Then you can deduct. I just realized, like, yeah, y'all really don't be supporting me for real. All I want y'all to know, some of the top deductions small businesses should be aware of include rent, all kinds of stuff. I'm going to finish telling them on my YouTube page. That's how cancers do you, right? We get emotional, just think about it like, wait a minute. They really don't love me. I'm looking for real supporters that love me better than all the others did, you know? I mean, literally ride with me. But anyway, Facebook. There are some small business tax resources that are available. So remember that the SBA maintains a guide on navigating the tax code. The IRS website will definitely tell you. And if you can choose which state your business will operate in, then you may want to consider the small business tax rates by state. So, and that kind of additional information and stuff can be found on that Tax Foundation site. Again, if you need the links to any of the things I'm mentioning, just, hit me up. And also the SBA has a helpful guide on choosing the right business structure. I've had a question today. One of my clients was asking me whether or not S Corp versus LLC. He has 2 successful businesses, but we're not quite there at that threshold of price. And, why push it? But anyway, there's also the IRS website has additional details on small business health care, tax credits and stuff like that. So, like I said, I'm about to finish out telling on my YouTube channel the other 3 tax write-offs. And I just want to say to my Facebook family, I love y'all. And like I said, I have been booked, blessed, and busy. And now that I'm doing tax preparations, y'all need to hit me up. Like I said, I don't care what state you in. I'm virtual. I'm 24 hours. And I'm giving out cash advances. All right, y'all. Peace, love, peace, and hair grease. I love y'all. Hit me up on my YouTube channel, Black Girl Magic Masters LLC. All right, now let's see. Now back to my YouTubers who are always with me. Always with me. Let's get back to you. And let's finish out some of these tax incentives. Right? All right, y'all. So we done finished with our Facebook for right now. So, all right, my YouTubers, let's finish talking about this tax situation that we got going on here now. So remember I said that you can, some tax deductions included rent, if you rent your office space or retail location, home office, if you have a dedicated workspace in your home that is regularly and solely used for business, advertising expense for all your promotions, your vehicle expense, your utilities expense. Then there's the travel expense. Business travel costs are fully deductible. These include flights, hotels, and other transportation costs you incur while on a business trip. Then you got employee salaries. Paying your employees pays off. Their salaries, along with many benefits like retirement and education offerings, are tax deductible for you. Dope, right? So, one of the things that I want us to finish is, as far as, is maybe, we can talk further on what documents you should gather together before you go to your CPA and get your taxes done. You want to do that? All right, well, we'll do that at a later date. And like I said, this concludes this particular portion. Again, there are small business tax resources. Again, the best tax software is what you need to go if you're going to do it yourself. But please seek out professional tax professionals. CPA, I mean, this is what they do. I mean, come on, they helping you pay off all your bills. Anyway, love, peace, and hair grease. I love y'all, my YouTubers, and we will talk soon, because I got more information to share for all those minority Black businesses that do not want to get left in the dust. You can trust your girl.